Welcome everyone back to CBRC Podcast and the Use Case Register. And today I'm very excited to be sharing the next use case with Dhivyan, which is a decentralized real estate lending solution. And this is with Kodelab. Without any sort of further aside, let's introduce Dhivyan. Dhivyan, welcome to the podcast. And if you'd like to introduce yourself, and then we'll talk about your exciting project.
Well, thanks very much for having me, Anthony. Happy to introduce myself. I'm Dhivyan. I'm a director at Kodelab. We're a full-service digital assets consultancy. In addition to helping large companies, we also have internal products, one of which is the Kodelab HELOC, and that's the actual product that forms the basis of our application under Anthony's initiative. So, that's me in a nutshell.
Brilliant. So talk to us about the real estate lending and HELOC as well, because I don't think many people would know what HELOC is. So maybe if we start with HELOC
Sure. It's a great place to start. So HELOC is actually a reasonably new term for us. We decided to apply it to the technology that we've got because it's just it sounds cool, but the actual letters stand for Home Equity Line of Credit. So the reason for that acronym is to differentiate what we've done to what would be a typical real estate loan in flexibility primarily. So normally when you go to a bank with your property, you lodge your property as collateral and then you borrow some money in return. If something goes pear-shaped, the bank gets to keep your property.
Most people that's called equity release, they'll know that as, wouldn't they? I think
exactly. Equity release, or even in the form of a normal mortgage where either or, equity release or a normal mortgage. That's the way in which it operates. You've got the fixed repayments. So you're given a big sum that's used to purchase your house, or it's just given to you for a new house in equity release. Or something else, and then you repay every month a certain amount. But with the HELOC, and what we tried to sort of introduce into the mainstream system is a way to lodge the property as collateral, and then for a credit facility to be made available to you as a borrower. So a credit facility is essentially a flexible way to draw down the total which you've been offered. So say your normal house is worth £1 million, and you decide to release 20% of it in equity. You'll be given 200,000 in your bank account. And then you just have to keep repaying it. You've got no flexibility. But if with the HELOC, you'll be given that same 200,000, but it will be a facility. So day one, you don't have to interact with it. You can.
So it's like a limit. So you can borrow up to 200,000 in this example.
Exactly, at any time up to that. And then, the thing is, you might decide one day you've got, for example, your children's tuition fees who are studying abroad. You might need to make the first payment of 30,000. You draw down your 30, but then, very importantly, you'll only accrue interest on the 30,000 that you've drawn down. So that's where it becomes very attractive. So instead of immediately this 200,000 facility,
and the interest rate on 200,000,
exactly, especially in the current interest rate environment, you could kind of the HELOC is, I think, it's very similar to saying it's a property-backed credit card. So imagine you had a credit card you go and spend. You only accrue interest on what you spend, and then on nothing more. I mean,
you can pay that. You could pay that back. So say the 30,000 tuition fees we said. I could pay that next month or in 5 years, or how does that bit work?
It's a good question. So it depends which hat you're wearing. So if you're wearing a full Web3 hat, we can use an example of MakerDAO, where, say you were to do your drawdown, that drawdown can just remain drawn down until the interest accrues to so much that it takes you over your LTV. So it's like indefinite, which for a bank is just a no-no. There's no way Yeah, no, they can't do their cash flows. They can't, balance their credit risk. It's just
Yeah.
it's not a money-making idea. But with Fubon Bank, we did this, implemented this technology for existing mortgage customers to give them an additional bit of credit on their property.
Okay.
So say, for example, they had 20% already in a fixed mortgage, we give them an additional 20%, or allow the bank to give them additional 20% in this flexible form. They said we need to have all interest accrued paid back before month end. So
Okay.
it means effectively you've got to make sure that any interest drawn down, any interest accruing needs to be paid back for the month end before. That's the way.
And does the interest accrue daily then? Is that so? So the interest accrues daily, or
It's a
what?
very good question. And I mean, initially it started off as a gimmick for us, but we implemented the interest accruing second by second, or
Wow.
in blockchain terms, block by block.
Yeah.
And that was initially as a gimmick, just to show the HKMA, hey, look, this is how granular you can get, what's accruing on your books.
Wow.
Then we started to think from a credit risk point of view from within a bank.
Yeah.
And say, for example, you had 100 of these facilities all open, these HELOCs across 100 clients. Seeing a second by second accrual of interest could potentially be very useful for you as a member of back-end staff, because you're able to, every day, for example, there'll be a reconciliation of positions. No matter who you are within the bank, you can open a snapshot and you can see exactly what your credit position is at that point. And that might give you a favorable, you might be able to go to someone who you need to borrow, another bank need to borrow liquidity off for the day, and say, look, this is exactly where we are. So give us X. There's no need to wait for the end of the day for reconciliation. So it started off novel, then it evolved, and then actually it evolved so much that the University of Cambridge and the World Economic Forum invited me to talk about this at their Supervisory Tech conference back in November. And the granularity and the transparency is what they were very, very keen on.
Wow. And that's amazing. A great story as well. It's really interesting. I think the question then comes back. So could you do this before blockchain? Could you do this type? Exactly. And so what is it about your solution and obviously the blockchain underlying technology that's allowing this?
So I think the main thing is the flexibility. So if you have been offered the 20% LTV to be forwarded to you as and when you want it, the first question is how do you interact to get that money? Would it be perhaps on your fiat platform? You would be able to interact and draw down on it, but then on the back end, how is that being logged? Is it going through whatever form, whatever system that needs to be balanced at two or more places? So you have that risk of error, and then also the actual contract with our system is being updated every time that there is an action performed. So if I was to draw down, say again 20,000 or something like that, the token, again more into the specifics here, the token that is representing that mortgage is updated immediately. So it exists on the blockchain as an immutable record of exactly where your credit position is. So if there's any issue with the system going down or any dispute, you've got this immutable record that exists. If it was the case where you have a standard ledger within a certain bank and it's being constantly interacted with up and down and an interest accruing and then back again, it becomes quite a complicated process for where you don't have the finality of a blockchain contract that is logging all of this. And when I say blockchain contracts, I mean a smart contract, something programmable that is capable of being seen as the source of truth as well, if there was to be any legal issue. So that's very helpful.
Yeah, so basically so we, in essence, you're tokenizing part of the property, let's say. In essence, that's that 200K
Hmm.
limit. And
Hmm.
then it's actually the tokenization will be, say, the 20K or the 30K you actually take for that period.
Mm.
And
Mm.
the interest is calculated on a second by second basis, which is pretty crazy, to be fair, but
Mhm. Yeah, yeah, it is.
amazing the detail you can go to.
Yeah,
And
yeah.
when it's repaid, it then just clears off and you get back to your 200 limit. And so you can borrow on and off. I mean, at the moment, that that wouldn't work for a million different reasons, but mainly
Hmm.
because the systems don't update real time, the finality doesn't happen real time, etc. And you can't go down to this level of detail because the current financial system is inefficient. That's, the way.
Yes, absolutely. Absolutely right.
And so what complex is so at the moment this sounds like everything's very rosy, but obviously still work in progress, early stage. What are the sort of complications that you're starting to see that need to be fixed next with this? Where is the next sort of stage for this?
I think really it's in the adoption of the cryptocurrency that would be used
Yeah,
to actually be lent out and repaid.
yeah,
Um, if you were to just, I mean, the HKMA is a perfect example. They've done it under a CBDC mandate, but they've made no decision as to whether they even want a CBD in the first place. So
yeah.
if it's not a CBDC, which I think that is the level of, I guess, certainty that a bank would need in a form of digital currency to
Mm,
kind of see it as, to accept the risk of
yeah.
basically going down, one of these innovative solution routes.
Mm.
So that's the first thing, whether or not they want a CBDC in the first place.
I think
Uh,
just to clarify for the viewers,
sure.
CBDC,
Oh
commercial
yeah.
bank, digital currency, and sort of stable coins, sort of government or bank issued, sorry, stable coins. So digital euro, digital pound, digital dollar, any of the currencies that people hear at the moment is a digital equivalent. So they don't really exist at the moment, a digital currency purely issued by government and banks. And I think so. So what Divian is saying really here is that that needs to sort of move forward first. And there's regulation appearing. So in Europe, we've got MiCA regulation. The UK is starting to bring in regulation. So, for viewers looking forward, it's basically a digital equivalent of the pound, dollar, euro you have in your bank account, but it's actually a digital money. So it works in the way that Divian can use it with his team, i.e., it can be made very quick, cheap, fractionalized, etc. So I think just to give the viewers a bit of an understanding of the whole digital money side, which is the big part that is progressing very quickly at the moment.
Yeah, very helpful. That's yeah, great supplementing piece of information to what I'm saying, especially, for those that don't know about the kind of global system around CBDCs as it is. And another area also that we feel is going to be a big a roadblock, is the recognition that legal rights, like real, reliable upon legal rights, can be placed into a smart contract, and
Mm.
that smart contract can execute, and whatever it executes it
So
should be recognized in law. I mean, there's nothing in contract law, especially at the moment, that says you can't assign the rights of contract into a token.
mm,
Contractual law, property rights get a little bit more difficult, like title rights, but certainly with contractual rights, assigning it to an NFT is no problem. So it's no problem for us to do. It's no problem for us to build. But convincing someone, especially a bank, that it's all hunky dory and they don't have to worry,
yeah.
they don't need mountains of paperwork to support what's going on here is going to be very difficult.
Yeah, and it's a very interesting one. The whole, I had the discussion a few years ago around code as law. The
Right.
code contract, the code that we actually use, because all of this is
Mm.
just computer code at the end of the day,
Yeah. Yeah.
making that law. And it's interesting, that's progressing in many different jurisdictions. But I think with the advent of AI and things like that, the whole, code is law is going to take a different meaning and have to be, that if a smart contract, the ABC, and for me, the benefit of that is a smart contract, a computer program, you don't even need to call it smart contract. A
Exactly. Yeah.
computer
Yeah.
program can be tracked and traced, right? It does A, B, C, D, E, F, G. It's not something that does its own thing. It's not a
Yeah.
human that
Yeah.
makes mistakes. It's programmed to do
Yeah.
A, B, C, D, E, F, G. That's it. And you
Yeah.
audit it to check it does that. So I think, yes, so as you say, the second part of it is the acceptance of that code, that programming as then law. So if it
Yeah.
does ABC, then the outcome is a legal, say, ownership change or payment, etc. So yeah,
Yes.
that's interesting.
Yeah. Yeah. Absolutely. I think it's yeah, convincing them that it's possible, I think, is just going to be tough.
Yeah. And I think the one other side we were talking about earlier is around, one of the benefits of this, one of the big benefits of this for the financial system is liquidity improvements, liquidity understanding. Just talk to me about the liquidity benefits for the system of this.
So, if you're talking about, I'll talk about the stablecoin version.
Yeah.
If that's okay. So, just for the viewers, I mean, Antti knows this, but our product, the Kodelab HELOC, can be applied under a CBDC use case, which is what we do with Ripple. But also, we've built a lending protocol itself on the blockchain that allows the release or the creation of a stable coin as a product of the collateral placed in it. So it's called HGBP. It's a GBP denominated stable coin. And for any ecosystem, for any chain, being able to lodge such a valuable asset into a DeFi protocol enables you to release as a product a very large amount of liquidity. So our first trial that we've done with a £5 million UK luxury apartment, we lodged that in the protocol, and we were able to release 3 million HGBP at an LTV of 60%. So immediately you have £3 million worth of liquidity in any ecosystem, which is just astonishing. Like there's no other. I mean, unless you happen to be and these guys do exist, a whale with millions and millions of Ethereum or whatever as collateral. That is not something that's possible. But this system enables people with property assets, which are far more numerous, and they're far more numerous in terms of being valuable, to release a significant portion of that equity directly onto the blockchain. And then, by osmosis, you have all this liquidity on a blockchain, and then via partnerships and integrations, that liquidity finds its way into the rest of the ecosystem. So it's kind of a supporter, or that's at least how we see it. And even actually for the CBDC pilot, that's one of the reasons we were giving as to why this equity release works so well, because CBDC as itself, talking about small amounts being sent over payment rails to another country, they're experimenting with 1,000, 2,000. Immediately with our technology and from property, you get a significant boost into the CBDC ecosystem in very large chunks at a time. So arguably, and again, this is kind of predicated on the decision being made to actually implement CBDCs. If they were to say yes, then immediately our use case becomes ultra supportive of it growing vibrantly.
Yeah. No, very interesting. And I think, again, for the viewers, it's about understanding that, liquidity is sort of where the money flows and what's there. So when you go to the bank, you withdraw money, that's liquidity, there's money available. When you're building a new ecosystem and a new digital money system, you need to have money in the system. But what that also means is, because of the fractionalization and the small loans and the information that Dhivyan talked about, it means that it's a lot more efficient. So you don't need as much money in the system at all times. So you can have smaller amounts of money in the system because it's moving quicker and sort of closing quicker. So again, it makes things a lot more efficient, a lot quicker, and so very interesting. It's really a massively exciting, and you mentioned it. Real estate is the biggest assets anybody owns any normally, people, obviously, if you own your properties and businesses, I don't know how many trillions or gazillions is is the real estate market in the world, but it's there. And that money, if you just envision a building, it's just all your dollars sat in that building, doing nothing.
Yeah,
Not
exactly.
doing anything, maybe parts of it are. So this
Yeah.
is, this to me, I always envision sort of, equity release, for with digital money as the whole building sort of flows into money just flowing out, which you can then buy your car, pay your kids' tuition fees and do things. It's unbelievably efficient, use.
I think you're absolutely right. I was kind of like I was like chomping at the bit to tack onto what you were saying, because it's just so relevant, especially when we have got the cost of living crisis. And well, obviously that's been caused in part by high interest rates. That's exacerbating things. And if you need access to cash quickly, this blockchain system is another thing. Speed wise, it becomes incredibly efficient to get access to this capital. It's a bank's it's designed as a system a bank can implement and bolt on, so it's still subject to the bank's interest rate. So you're probably not going to be getting around the fact that you'll be paying over 5% on whatever you borrow.
Yeah.
However, the flexibility of being able to draw down a fraction of what your full LTV is on the property, and repay that back in potentially a very short amount of time. If it's something which you're expecting to get refunded for in the next week or so, like an invoice, even, for example, that's because it's not just restricted to the everyday consumer. Businesses can rely on this technology to draw down liquidity, for example, as they wait for other receivables to come in, and not have to pay extortionate fees. Because I know, especially for invoice financing, it's 18-20%, which is just astonishing. And if a bank's offering it, you can be comfortable it's not a loan shark, and also you're borrowing on a smaller amount over a shorter time.
Yeah, brilliant. No, that's great. So obviously, we mentioned at CBRC, we do the CBRC score of projects that we sort of research and verify. So with your project, it's been awarded a score of 82, which is excellent score out of 100.
Thank you so much.
No problem. And I'll just read the sort of the summary, because I always have to read this so I don't get it wrong. Real estate equity release is a complex task today, and this solution make it significantly more acceptable for people accessing the liquidity from the property, which is very difficult today, accessing a fraction of the equity. So a lot of what we just talked about with Dhivyan, doing it at speed, at low cost, and then using a digital currency to quickly move money, invest in other places, etc. Once the property's tokenized and the assets tokenized, this needs to be confirmed with the bank and then the details shared. And I think that's where blockchain again comes in, where it's giving one view of the truth of who owns what where. And you can only do that with blockchain technology. So I think it's a great use case. It's so important, and obviously, I mean, it's not just real estate as well. I think you can start tokenizing other assets. You can start fractionalizing things, and all of a sudden, the system is a lot more efficient for people, for businesses, and for governments. And I think that's what's most exciting about this type of project, is that you can make things a lot more efficient, a lot more simpler. It's just easier for us to do these things. Equity release is just one of the hardest things to do in life. It's a painful process and it's very expensive. This type of solution makes it simple, quick, and you can get just a small amount of money if you need it, as you say. So I think it's an excellent project. Well done to the team. What's next? What's the next stage coming up with this project?
Wow. So we are due to bring our lending protocol online anytime now. We're going after in the process of waiting for our FCA crypto registration to come through.
Cool.
Might be waiting a while. But for me, I guess the most exciting thing that's going to be coming next, and you kind of touched on this, is other applications of the technology. We've had interest from people that have, mountains of gold in a warehouse. Not a bad position to be in. But
I'd like to go to that warehouse.
Exactly. Exactly. And it would be great if we were able to tokenize physical gold in the exact same way as we've done with real estate. It's actually a lot easier because the title rights can make things complicated. We do pride ourselves in actually being able to put title rights into an NFT, which no one has been able to do at this point. We worked with DLA Piper for 2 years to put that together. And we are just thinking about the appropriate time and place to deploy this. And that would actually enable me to sell an NFT to you, Anthony, and you would have ownership rights to my property. Yeah, it's really significant. I can't go into the secret sauce too much of it at the moment, but as soon as it's out, we were able to sort of get to this stage from starting at that equity release from property, and it's branched out into equity release from other assets, and then also what the collateral being used to generate this equity release represents, and is it transferable? What else? We've even experimented with the mortgage itself. So tokenizing the mortgage means that the rights to the income now sit with the token. Therefore, if you as Bank A were to sell it to Bank B, now have you're now selling mortgages, which is like a multi-trillion dollar it's an ecosystem around the world. And if we were able to tokenize that, and then we could even form mortgage-backed securities by having hundreds of those. I'm waffling now, but I just think it's suffice to say that it's there seems to be no limit as to where we can apply this next.
Yeah, and it's interesting because a lot of people say, blockchain's all about, unrealistic sort of, technology looking for solutions, but
Definitely right.
we have solutions already. But tokenization of these and then the release of the equity or the value, the money from it is just 100% where this is all going. And be it, as you say, property, gold, any other assets, artwork, all those sorts of things. So really interesting to see. So massive thank you for your time, Dhivyan and Kodelab. It's been a great sort of catch up. If people want to sort of connect with you, how do they connect with you and the team?
You can reach out to me on LinkedIn, Dhivyan Kandiah. I'm sure that'll be attached to this video, or drop us an email directly to Kodelab. You go to kodelab.io. Contact form is there. We're extremely happy to help with any digital asset solution that you are envisaging, or if you aren't sure if you need digital asset solutions and infrastructure, we'll be happy to talk you through it. It's what we love and it's what we do. So yeah, thank you. And I wanted to say a big thank you as well to you, Anthony, for inviting me on to talk as well. It's definitely not one way.
Brilliant. No, it's a pleasure to have you in. Thank you very much. So thank you, Dhivyan, and look forward to seeing how the project progresses and all the other interesting things that comes next. So thank you very much for your time.
Oh, thank you. Take care.